Hey, what's up, everybody? Hopefully, everybody has starting the week green, and hopefully, not everybody is too red. So, I think today I want to touch on a touchy subject, something that a lot of traders don't really talk about, and I actually have the perfect example today, right? So, my main conversation today, I'm going to point out a couple things in the market, but what I really want to talk about today and touch base on is the psychological part of what happens when we have emotions and when we hold bias to a ticker. Um, and just in general, when it comes to day trading, right? Some of the psychological stuff that a lot of traders out there don't talk about. And a lot of people are afraid to talk about their losses, right? So, yes, we're going to touch on losses today. And I'm gonna do the best I can to show you guys a perfect example, but gotta see if I can find it first. Anyways, this market's been a little rocky. I gotta admit, it's been a little tough to day trade. It's been a little tough to swing trade, and swing trading is probably one of the ones that is very tricky because it can either ruin you or it can make you, and it's just what it is, right? So anyways, um, so yeah, let's just dig into the market real quick and just show you guys a couple things that I'm looking for. Kind of touch base on the previous video and some of the levels. All right. So one thing that I did mention on ES is that I wanted it to just base out right here at these levels. If we hold the range right here, I think we'll be okay. I think the market is still healthy. There's a lot of volatility in the market, and the volatility, I'm not saying like we're indecision. It's basically we're ranging. When we range trade, we're literally buying tops, buying bottoms, and just trading the ranges and waiting for the breakouts, right? And just the one thing to look for is to make sure that we're in the right direction, make sure that we're buying at support, selling at resistance, buying at resistance, selling down at support, because we're option traders. Or if you want to short sell something, that's what you're doing with stocks. However you're trading, if you're trading spreads, maybe you're grabbing something that collects premiums or whatever it is you're doing out there. You just want to make sure that you catch some um, good direction, and you want to catch some good movement, either up or down, whatever it is. Make the best out of it is basically what I'm saying, right? So I like that we're basing out down at this bottom. I really like that we held this 43.25 on ES, and it's holding this base that I previously talked about. I really wanted to see this retest right here at this like 43.60 and kind of hold. Unfortunately, it did not do that yet, and we're still kind of ranging at this bottom, which is okay. All right, I'm letting you know that it's okay. If we break 43.25, we're gonna have some issues. And then if we start breaking this 42.70 area, we're gonna have even bigger issues. All right, be aware. All right, remember that. 43.60. I think 43.60. If we crack in the next like 2-3 days, or even by Friday, and we end up running bullish, I think we'll come back up here to this 44.1720 area, and we'll start seeing some bullish sign and momentum in the market. It almost looks like there's bulls wanting to come in, but they're hesitating. By hesitation, is that I mean that there's not a lot of follow through in a lot of these tickers, but some of them they are trending. So if you catch the right one, you're gonna have a great day. And today the watch list consisted of something like ZM, Target, ARC, FSOY, TTD, Qualcomm, Z, tons of tickers out there that had a lot of good movement. Roku, if you guys got in, we did call that out from the probably midway. Had a nice pattern in the morning, so gave opportunity also as well. So lots of great plays today, guys. But even with all the great plays, guys, you got to remember that we all go through losses. We all take losing trades. All right. That is what we want to cover today, and not just the market, right? Expected move. This is our format. I'm gonna leave this for another day. But please remind me in the comments to make a video on expected movement. So, um, our losses, guys. How do we feel about taking losses and entering and exiting our trades for a loss, and then we have to come back, and then next thing you know, the ticker is green, or we walk away for like an hour, come back, and then had we held the position, we would have been green. Technically, it doesn't really matter, okay? Because ultimately, it's our job to buy and sell our positions, okay? If we're buying and selling a position, we know where we're buying and we know where we're selling. We got to understand the important factors of understanding direction, what time frame you're trading on, and what the bigger time frame is, providing for us, as in, support or demand, whatever it is. And it's going to be the reaction that we take as traders to ultimately make that decision based on what we see value in. By that I mean, if you see, like, perfect example right here on NQ, and you see that it's at support, right? Technically, what you're going to see is value in something like this. If you know something is at support, why aren't you buying it? That's the major question. Why aren't you buying it? If you feel comfortable, you're definitely going to buy it at these levels, and you're going to stop loss right at the bottom. Is it going to be a loss? For sure, but you're going to manage your risk, okay? This is the ultimate decision making. If you're buying at support, your risk is minimal. You'll definitely take that loss, but it will be a well managed trade. Okay, it has to make sense. If it's not a well managed trade, it's definitely gonna screw you over on a psychological and emotional basis. Why do I say that? Because I'm gonna give you the perfect example today on stuff that we all go through as traders, and the bias that we get when we see things and when we see value in things, when we when we become so confident and so stuck to the bias outlook that we have in the market. You guys hear the sayings that stocks only go up. I get it. Okay, I 100% get it. But it's not always true. There's stocks that downtrend, there's stocks that pull back, there's stocks that on earnings they drop, they tank. Some stocks go to zero. Okay, so not all stocks go up. Remember that. Some of you guys are new traders thinking that you're just going to buy something and make tons of money on the way up. I'm going to buy Tesla today, guys, and you're going to hope that it goes up. Hope is not a technical analysis word, okay? Technical analysis, you're talking about something like, a bounce of an EMA, a rejection off the SMA, a bounce off the VWAP, a bounce of a breakout of support, breakout of a pattern, a news catalyst. All these things are some technical analysis vocabulary words that you can use. But when you start using something like hope and something that's biased, and you're stuck on something that is going the opposite direction, you're going to get stuck. And psychologically, that's what's going to screw you over. It's going to mess with your emotions, your reasoning behind everything. It's really going to ruin your whole trade, and it has potential to ruin your next couple of trades, right? And today I want to cover something that I ended up taking as a loss, and I'm going to show you the losses as well. It's a lot worse from the picture, but I'm going to show you exactly how my thought process was, right? And I know a lot of you guys can relate, and I know a lot of you guys out there struggle as well with taking losses. And when it comes to swing trading, when it comes to bag hold something you shouldn't. And this is why a lot of traders out there always consistently say that you should stop loss at a 15% maximum. Maybe I think 20%. Some people say, but again, it's the type of trade and the type of trader that you're going to be and take that's going to define your risk. All right. For example, I am somebody who will only cut loss based on the chart. All right. I don't care about the percentages. If you are somebody who's managing your percentage, you're making sure that you don't go no more than 15 to 20% max, because your gains should be bigger than 20%, 15%. You should be at 30, 40, 50% on your options, whatever, whatever play you're taking. If you're not, if you're having trouble going over 20%, then let's readjust that, right? At Conservative Collectors, there's been a lot of 100% plays lately. And if you guys are missing out, like, come check it out. Like, I'm telling you, there's tons of 100% plays in there. So anyways, how do we deal with these emotions and what goes through your mind? All right. First of all, I want to point out Cat. Cat's one of the tickers that I've been personally following, that I've been trading calls on a lot lately. Been trying to catch a lot of these bottoms and trying to capture the reversal for this, right? Capturing the reversal before it actually happens in this market can be a little risky, but also can be a great rewarding thing to happen for a swing trader, because we look for these longer plays, we look for leaps, we look for, things to build positions on, right? But again, not everything goes our way, and we have to learn how to stop loss and how to manage those losses, right? So let's talk about Cat real quick. What I'm going to do is look at this weekly time frame. I'm going to pretend this red candle was in here just because it's the today's Wednesday and the week already started, right? So technically we had this nice little green candle right here with these two little candle bodies, whatever. I want to point out this level right here for Cats. All right, see the important level right here. This level right here is very important on the weekly time frame, and you see how we were holding right above, right? I just want to make that clear, that we're kind of looking at the same thing, right? We do have a nasty downtrend, and we do have this ticker that kind of broke support right here. All right, this piece was right here, a nice little support. I'm just pointing it out, and then from where we dropped from and everything, right? So I actually traded calls on Cat right here on this run up here. Okay, I got stopped out on my swing right here. And then this next one, I ended up catching it right here at this bottom right here. So what I saw value in Cat is that it had like a double bottom, all right? So this is what I saw, and I actually got in here and I swung it for over 100%, right? So just giving you guys the position that I was in, the position that I ended up taking, and that I personally saw value, and I saw value in the chart. Are we downtrending overall? Yes. Okay, this is when it gets risky. It gets risky because the overall trend is still bearish. All right, I want you guys to see that. Now, what happens to a trader when you get biased? What happens to a trader when you get biased is that you forget about the bigger picture and you start thinking the reversal that can go your way. Okay, remember that. You forget about the bigger picture and you think and you hope that it's gonna go your way eventually. That's why you buy time on contracts. It's not always so. This reasoning comes behind our hopes, becomes greed, becomes unawareness, and all those things above, right? And then all of a sudden we see a little red, we're at like 15%, and we're like, man, should I cut? Should I not? Last time I did this, I turned her back around and I came back and that stock was green, whatever it was, and you missed out. What happens is that you took your previous experience and you brought it over now to you to bag hold a bad habit. The bad habit that told you last time, because you cut loss at your managed risk, 15%, by the time you came back, it was already green. So now you faked yourself out coming into this next trade. This next trade, you were red 15%. But what did you do? You decided to bag hold the position and you let it drop even further. Next thing you know, you're messaging somebody else, asking somebody if they're in this trade with you still. How many of you have done that? You're asking somebody else if they are in this trade with you still. Even though you know it hit your stop loss, you're still asking other people, wondering if you're in that trade with you. If they're in that trade with you, if you should be holding that trade, and next thing you know, you're reasoning and you're saying, well, he's in it, so I'm gonna stay in it. Now you gave yourself another excuse to hold the position when you shouldn't be holding it. All right. I know some of you guys don't want to hear this, but that's what it is. Everybody's in this Discord. In these Discord groups, tons of Discord groups, you all direct message each other. All of you guys talk with amongst each other, and somebody else out there is going to say, oh, I'm still in that position. Oh, shoot. Well, he's in it, so I'm going to hold it too. That's not the way to do things, right? That's totally the wrong way, because now what you did is not only that you bag hold that bad habit and you brought it upon yourself into this trade, but now you made another reason for you to hold your bias and to hold your hope and to hold your greed in the hopes that something will turn around for you. I hope you guys are here with me. All right. So let me show you what I did, and let me show you how my mindset was working through this red trade. Okay. And I'm telling you guys because I want to be able to show you guys, and I have the proof to show you guys, and not just sit here and rant about something, because we all go through this. All right. I feel it. Believe me. I like to see my reversals. Sometimes I bag hold them when I shouldn't. You know, overall, in general, my consistency is I don't bag hold my losers. I bag hold my winners. My consistency lies within those good trades. Okay. Here's the thing. Let me tell you about Cat and what happened to me. All right. First of all, I saw this, and I saw this gap up, and I saw this thing running up here. Okay. So I'm going to draw this little box right here. And I saw this thing running some more. All right. So I was already in it. I was already over 100%. I was already 113%. What happened here? Okay. This is the part where we get greedy as traders. We knew that the market was bearish. We know that this market is a little volatile. We know that the bigger trend on CAT is downtrending. Okay. So what I ended up doing is I ended up holding my my play that was over 100%. So now I'm over here saying, like, man, I got some time on this, right? My reasoning behind it all. I got time on my contract. I'm good. I'm in the money. I'm like $10 deep or $5 deep, whatever it is. All right. Some of you guys, you know, go in and you're like, you know, I'm in $1 deep in the money, at the money, or whatever you're saying. And you're like, man, I'm at 100. What should I do? What should I do? But little do you know that it's the greed that tells you to stay in, because stocks only go up. You want to make the biggest percentage return ever. You want to get the biggest one, and you don't want to let that go, because you don't want to miss that opportunity that you missed it in the past, right? So I'm gonna go on a smaller time frame. My target for this was about this level, this 202, and about this what did I say, 198. Yeah, right here. Okay. This whole area was my target. So I saw a cat and I was like, heck yeah, I'm getting in right here. I ended up loading some more calls right here. So I got in more contracts. All right. By this point, I have about 6 contracts total, and I'm pretty deep in the money. And I have a big position for cat. One of my biggest positions that I had around these days, right? What's today? Wednesday, Monday, Tuesday, Wednesday. Yeah, so Monday. On Monday, I started off, and that's how I started off my Monday. One of the things about Mondays is that if you start off red on a Monday, it kind of sucks. It's almost like a letdown in the market for yourself. And then next thing you know, you bring it on to the next week, and then you kind of beat yourself up because you're saying, man, I had a red day on Monday. Why can't I take a good green trade? And next thing you know, it affects all your other trades the rest of the week, right? So anyways, I ended up loading up right here on cat, right? And again, I'm gonna take off this little box. I'm gonna draw this. My stop loss was 194.80. Okay. I know some people took this trade and ended up being red, which is no big deal. Hopefully everybody followed the stop loss. So anyways, I was here. I actually made the excuse to myself and I said, you know what, guys, I'm out, I'm enjoying the day, so I'm not going to look at my positions. We all have access to our phones. Let's be real with each other. We have the ability to check our phones. We have the ability to check what the market is doing and our positions. We can't use the excuse as to I'm not near my computer or I'm not near my charts. I can't see what's going on in the market, so I think I'm going to hold my position. I'm going to give it one more day. That's what happens. The alert popped off. Yes. Did I get it? Yes. Did I follow through and stop out? No. Why? Because I was already biased on the bullish side. I was biased on the call side of things while the market was dropping. I knew the market was dropping. I knew that my position was going red here, but I knew that I was still green overall. That was the thing. So I did not stop loss. And guess what? I let this thing down. The next day, wake up, I said, okay, we're holding. Here's the other excuse that we make. Well, I'm gonna give it another day because I have time, right? We trended up. We started off green. But then the general trend brought it back down, 190. So technically, if you bought in at 195 or 196, you're down $6 all the way to 190, right? By this time, I'm already red on my contracts. Okay, I know a lot of you guys feel this. By the time you're there, you're giving yourself another day. You come into the next day into the market chain, and you're sitting there watching your P&L go red, and you make the excuse like, I'm gonna give this another day. Let's give it another day, and because we got time on the contract, so I'm gonna keep on holding this. And you're like, cool, you convince yourself 100% that everything's gonna be okay. You go talk about it, and you go ask somebody in the chat again, hey, who's in cat? Somebody says, I am. You're like, yes, I'm gonna hold this position just a bit longer. Now what you did is you made a second or third excuse now. You already got the first one, you did not stop loss because previously you've done it in the past, and the stock goes up. But then it drops and you're like, well, I'm gonna give it that other day. Then you ask somebody else and you're like, he's in it. There's your three excuses already. Why haven't you stopped out when you're already negative 40%, 30%, 60%, 70%? Well, you let this thing play out again, and then here comes Wednesday again. Well, are you still in the position? Well, yeah, I mean, it's already negative, more than 50, 60%. I'm at 70% negative now, so might as well just let it go to 100, right? That's the attitude that we get because we decided not to follow our stop loss when we could have easily managed a well-managed position, a nice setup that was here, but we convinced ourselves with excuses to not stop loss and manage our risk as traders. We did not decide to make a change within ourselves to grow. This is what stops us from growing, okay? When we consistently do this and we let our contracts go to zero, we let them overpass our stop losses based on percentages. In this case, for me, it hit my trigger and I never stopped loss on it. Why? Because of the greed behind it, because I got biased. I know you guys have been through this. So don't sit there and tell me you don't, because a lot of you do. And I'm sure there's a lot more that goes behind the scenes when you guys are in these losses. You sit there and you hold and you're like, I'm going to hope it turns back around. Well, it's going to hit this next support. It has to turn around right here. Wait. Let's go hit this other support, on the bigger time frame. Let me zoom out some more and let me find the other bottom. And I think this one for sure has to hold. Isn't that what goes on in the mind when you guys are in these red trades? For all you new traders, experienced traders, we all go through the same thing. There is nothing new under the sun. There is nothing new in this market that we have not experienced and that we don't all go through at the same levels. The only difference is how are we going to react when these things happen? The reaction to who you are as a trader has to determine your growth potential. Okay. Once you can hit that stop loss, no matter what happens, if you can hit that stop loss on a consistent basis, you will continue to grow as a trader because you will manage your risk well. This right here, letting it go down all the way down here and still saying, oh, well, I got time on my contracts. I got like a month out. Nah, it doesn't work that way, okay? It hit your stop loss from the beginning. Stop out, get the heck out, come back in later. Don't worry about it, right? Emotionally, what that's going to do for you for the next day, you're not going to be able to take a green trade because you're going to see your P&L, it's red. You're going to come back and revenge trade something that you lost. And then when you revenge trade, you're going to over trade. You're going to get on your position sizing a lot heavier. And then you're going to take a bigger loss. And next thing you know, you're still bag holding this one, hoping that this one turns around because you already took a fat loss somewhere else. And now you find yourself chasing the rest of the week and missing out on potential plays that are great setups. Okay, I know you guys feel that. Tell me you don't. Put it in the comments, tell me you don't. I know everybody goes through this. I know everybody has gone through this, right? And let me just show you guys, to show you that it's real. It's not something that, you know, I'm sitting here and making stuff up, okay? Check this out. I'm going to show you. I posted the profits right here at Conservative Collectors. This was yesterday's, all right? I ended up stopping out. Look at this 33%, all right? Negative 33% on the whole position. This was over 1,600, all right? I think it was like 16 or I don't know, something like that. I can't do the math right now. But look at this contract, right? At the October 15th, 197.50 calls, all right? Look at it, negative 62%. Why the heck would you be holding that position still? Look at this one, 39%. Why the heck did you not take profits? Here, like I said, I loaded up on some more, right? I bought 4 more. 45% negative. That's 500. That is $720 negative for your P&L. Most of you guys that have smaller accounts will freak out if you see negative 720. That is like a paycheck, a 2-week paycheck right there for some of you guys. I ain't lying. Some of you guys don't even make this much in 2 weeks on your regular job. But I'm over here losing this in 2 days. You see? But I want to show you how important that is, that you know, you got to make sure that you manage your risk. You got to make sure that you're respecting the levels that are provided for you. I know the mods, you know, everywhere in the Discords, they put levels on, and you know, we break down these tickers that are amazing, and we plan up a good setup and everything, right? Question is, are you going to follow through? The question is, are you going to be able to stop loss if it hits your stop loss, right? Like, can you do that, right? And again, it's going to fall down to who you are as a trader. It's going to fall down to what you see value in, right? So let me show you another one. Like, even with all that happened with Cat, right? Even with the emotions behind it, the psychology behind it, the huge loss, did I allow that to affect me today? Did I allow it to affect me yesterday? For me, my answer is no. Why? Because I've learned to get over my emotions. I've learned to be consistent within my trades, and I've learned not to bag hold my bad experiences and bring them with me into the next day. Do I feel them? Yes. We're always going to feel these emotions no matter what we go through. We are freaking humans, and we feel these emotions when we're trading because it's real money. It's real hard-earned money that we work so hard for. I mean, if I just threw $720 down the drain, most of you guys are probably looking like, man, that's a big loss. Why didn't you stop out at 62%, right? Why are you still bag holding? Like, you could have done something with 720 bucks. Most of you can go out and buy some groceries, you know, and maybe provide something good for your families. But again, I'm pointing out the value in the losses that we take as traders, that it's important that we follow and manage our risk. And if we do it well, we won't end up with 62%, 45%. right? We will make sure that our profits are a lot bigger than our losers. That is the purpose. And the purpose to come back the next day is to find setups like this. This was on the watch list today. I hope somebody traded it today. The trigger level were right here, this 258 and 260. Why? Because I knew that it was going to break above here. And it actually ended up rocking all the way to this 268. Let me show you another one that did not stop me from making a good trade. Target was another one that did not stop me. Target, I ended up taking it right here, right above that zone, right over that supply. I knew that if it broke this little base, it was going to be a rally-based rally, and it ended up rallying all the way to 236.80, whatever, right? So that was just a trade for today. Another one that I took today was Roku. Roku, I ended up buying as well. So even with the losses that I had, even with those huge losses, I was still able to come back and day trade some very, very good setups. Most of you can't come back in and trade a good setup because you're already worried that you're going to lose more. Now you're allowing the emotions to get the best of you. You're allowing your emotions, your negative emotions, to control you and to stop you from the potential growth that you have. Don't let that stop you or prevent you from growing and prevent you from taking the next best trade. Don't ever allow that. Okay? Don't ever allow anyone in general to stop you from growing and to stop you from the potential that you have to become great. Okay? Let me show you another one that I ended up swinging. It still did not stop me. Even if I took all those losses on CAT, it did not bother me. I took this ARC position. I ended up taking profit right here. Nice little trade. Amazon. I'm actually in a call for this. So, man, it's either going to make it or break it for me tomorrow. I ended up taking this trade right here. Oops. But again, it was squeezing right here. So I ended up taking this scalp trade. I took it right here, and I took profits right there when it hit that 32.80 psychological. Had I taken profits again, I could have, but I actually ended up entering this position again right here in this level. So I think I'm slight green or slight red, whatever it is. But I took the 32.85. I took a weekly trade for this. Sorry, weekly contract. If that makes sense. But let me show you the risk that I'm taking. I have no control over the market and what it's going to do tomorrow, but it's hitting this resistance line. Okay. One of the biggest things that I always say is that if you guys have this trend line, how many more traders out there do you think have the same trend line? How many more traders do you think out there are trading the same trend line? How many do you think out there got into puts right here? Right? High potential that you're going to win on the put play, very high. Higher risk that your trading calls, super high. So this becomes a higher risk. Why would I take calls right here if I know that it's at a resistance point? Well, we actually created a nice little base here, so we have some support, okay? But I'm not going to allow this to prevent me from, stopping out of my trade. If it breaks below a certain level, and I'll know pre-market's going to determine where my stop loss is going to be. I will make sure to follow my my stop loss level 1, just like we talked about CAT. The bigger trend, the 4-hour trend, was downtrending, correct? Okay. Does the structure make sense? Yes. My stop loss alerts down here, and all that's going to change pre-market. I am going to know it's either we're going to gap and go, or we're going to gap and drop. One of the things, or it's just literally going to drop. This market is going to reverse overnight. We might go down again, and next thing you know, it's a gap down, and I'm at a loss. Am I going to follow my risk management? Yes. Okay. So I'm showing you this because now that I have to hold myself accountable to the position that I personally took now. Amazon, you guys know it's a heavier ticker, and some of you can't stomach holding 3K, 4K, 6K overnight, let alone take a loss for 720 bucks. By the way, that was just a little bit more because I held it an extra day, FYI. You can only imagine how much that loss was. So yeah, I really hope that this conversation helps you guys to stay motivated, not only to stay motivated, but just to always come back. And remember to don't bag hold your bad habits, okay? If you see these bad habits, change them right away, please. Get somebody to help you to understand what day trading is, what it means to manage your risk, what it means to stop loss, what it means to not be greedy, what it means to, respect your levels by taking profit at your first profit target. If you have a few, let them run and test it. Take profit and scale out on your second profit target. All those things. If you don't know how to plan a trade, go look at the previous YouTube videos. And a lot of them show great trades. I don't sit here trying to spoon feed people because that's not the point. I want to sit here and be able to conversate with somebody who's going to listen, pay attention, and actually put in the work. So many DMs that we get that people say, thank you for the YouTube channels and the knowledge that's being provided. Some of this knowledge, some of this stuff that we talk about is not really talked about in your servers. One, because they're trying to sell you something and they want to make sure that they continue to get money over and over and over. Two, they truly don't know how to teach. Three, they want to charge you even extra. Okay, and that's the reality of things. But you got to remember that why they charge, because it's extra value that they're providing. Here at Conservative Collectors, the signals that we're posting, they're over 100% gains. The type of mentorships that are provided are more valuable than just that signal alone. Some of these guys take the time out of their lives to come and teach. And that is the most important thing. If you guys don't know where to go to for help, come to Conservative Collectors, DM us, hit us up, let us know how we can help you, right? That is the purpose. We don't want you guys to fail. We want to see everybody win. We want to see everybody take some good percentage plays. Not only that, but to do the best you can to be self-sufficient, okay? Remember that we don't want to see anybody lose, but just so you know that we can relate with your losses. A lot of us have been there. A lot of us still go through it. There's not a day that goes by out of the month that we don't make a mistake. Just because we find consistency doesn't mean we don't have those mistakes. We all have them. We all live them. We all feel them. We all go through them. That's why we need breaks. Take a break out of the market. Go relax. Go enjoy the sun. Go enjoy the snow wherever you're at. Enjoy the thunderstorms. I don't know. Whatever you enjoy, go out there and enjoy it. Go do it. Stay away if you have to for a day or two. Stay away for a week. I know some traders out there, some moderators, some people who run servers that they take weeks off because they need it. It's a mental thing, guys. It's a mental thing. If you're struggling at home and you bring those emotions with you, it's going to be bad news for you. If you're having a great day and it's amazing at home, I'm going to tell you that also can be bad news for you in the market. You may bag hold something you shouldn't, and you're just going to be happy-go-lucky and start press buy everything. Next thing you know, you're in this big hole and your day was just ruined by the stock market because you let the emotions get the best of you. Feel the emotions, but know that you still have to control them. Feel the emotions, but still you have to respect your levels, okay? No matter what you do, respect the levels in the market, because this market, I'm going to tell you what, they don't know you, they don't care about you, and they're going to take your money. That's what it is. The market has no feelings. It's a freaking candlestick body. It's a candlestick wick that does not care about you. It's a pattern that will play out with or without you. It is a trend that will go with or without you. Okay? Remember that. But yeah, I mean, I don't even know what else to tell you guys. But just remember, please manage your risk properly. Be conservative. Don't go too heavy. If you're confident in your position, take it. If you're not confident in your position and you have to think twice, stay out. Keep it simple. Don't overthink things. Okay, don't overanalyze something. Zoom out. If you have to look at the bigger picture just to remind yourself what the trend is. Zoom out if it's breaking trend. If it hits your stop loss, get the heck out. If it hits your profit target, take profit, turn off your computer, walk away a happy person. All right. So I hope this brings in some light into you guys. I hope this gives you guys a little more hope to come back in and just know that you guys are not alone. We all go through it. We all feel the same emotions. We all, bag hold things that we shouldn't. We all look at the market in different ways. We all handle the market in different ways, and we all handle losses in a different way. It's more of a psychological thing, guys. We all go through it. Remember, find yourself somebody in the servers and hold yourselves accountable. Find one or two people that you want to trade with, that you want to communicate with, and hold yourselves accountable. If you don't, who's going to be there to hold you accountable? Your little brother, your little sister, your mom or dad? Like, they're not going to be there, because I bet you that most of them don't even trade, and you're the only one in the family who's day trading. You're the only one in the family trying to do something right. And most people don't even understand it. Believe me, I know what it's like. I am the only one in my family who day trades, and nobody else wants any part of this. They think we're crazy, right? They think it's gambling. It's all good. Let it be so. But just stay motivated, guys. No matter what you guys go through, stay motivated. A loss is a loss, but accept it. Don't let it happen again. Change it, okay? Change those mistakes, change those habits. But again, let us know how we can help you guys. Let us know how much more we can do for you in order for you not to go through what you're going through, because change is possible. If I can trade full time, somebody who doesn't have a GED, somebody who has a past, I'm sure you guys know, then what's stopping you? All right. So I'll leave you guys with that. Hopefully you guys enjoyed this little quick session that I wanted to do, and just understand psychological emotions and stop loss risk management, guys. All right. So you guys have a great rest of your week, and I will see you guys on Sunday for the weekly watch list again. So don't miss out. All right, guys, stay green.